So I've got like 4 or 5 different brokerages. Now in each of them, I'm running different strategies completely. Look, for example, one of my brokerages, all I do is buy the SB 500 and nothing else. One that I used to share heavily on the channel was with Trading 212. But what I'm going to do is share with you guys the evolution of one of my brokerages, which should be one of the more interesting ones, because I will be taking it from where it's at right now up to $1 million. And I want a record of this. So it should be interesting for you guys to see the moves and the strategies and what I am doing. Let's open up that brokerage. It's with Interactive Brokers. As a matter of fact, if you guys are on any of these novice clown brokerages, I'm talking Robinhood, I'm talking Webull, look, even Moomoo I'm hearing about, look, get yourself off them, get yourself onto an established broker. Interactive Brokers is your go-to. As a matter of fact, I'm going to leave a link in this video description. You guys click that, open up your free account with Interactive Brokers today. All right. Now, guys, the strategy that I use with this in this particular account is to buy individual stocks that I want to own for the long term. So none of that speculative high risk stuff, okay? None of that stuff with tons of uncertainty around them. I don't do any of that in this particular brokerage. The second thing, guys, and in terms of size, it's normally above like 150, 200 million market cap, okay? Stuff that's got like good cash flows, profitability. That's the stuff that I buy in this particular brokerage. And you guys will see that in a minute. The second thing is the selling puts, okay? Heavily on selling puts. Why? Because you are taking advantage of a market phenomenon, and that is option decay. Option decay now works in your favor. That means every single day you are accumulating income, and we'll get into that in a minute. The third is selling of covered calls. So that is using your stock now as an asset to make money, right? Think of it as like rental income, that kind of thing. You own the asset, you can now make money off the back of that. These are the 3 strategies I'm going to use them to take this account to 1 million. Okay, now I'm probably going to be doing videos on a weekly basis, run you guys through the moves that I've been making in this particular account. So notice I didn't say I'm buying any calls or buying any puts. That's in a different account, okay? In a different account, I buy calls and puts. This is just focused on selling strategies. Why is it focused on selling strategies? Because selling strategies sync very, very nicely with stocks that you want to own, okay? The link is just perfect. They blend together very, very well. That's why I only do it in this particular account. And Interactive Brokers makes that very, very easy to do. All right, check it out with me. Currently at 45,000, all right? Let's go through the moves. Now, I'm going to try and do this in relative speed, okay? Because I don't want this to be dry and I don't want it to drag on. I want you guys to watch this. The first one we got is Marvell, MRVL. This is a semiconductor stock, quality name. Semiconductor right now is in the dumpster. However, makes massive opportunities. What you'll notice is the first few couple of moves, okay? Or like half the line items here are all sold puts. There's a reason for this, okay? Because I told you I'm heavy on selling puts in this particular brokerage because I'm using that as a way to generate consistent and regular income from the market. So it's a necessity, it's a must. Marvell is a strong stock. Now, this is currently at 53%. Unlikely it's going to drop to 37.5. That's the strike price. Next one is Qualcomm, a true undervalued stock in the market. And Qualcomm is one that I sell a lot of puts on in this, a lot of puts. And the guys over the Discord will know I just recycle and recycle and recycle and recycle and consistently make that money from the markets via this strategy. And Qualcomm is one of my go-to names. AMD is another one. I've sold like 20 AMD puts, 25 AMD puts in the last like 8 weeks. Okay, guys over the Discord will tell you that. It's all there. Now, I just sold out of one like 3 days ago. I'm selling out of some potentially this week, next week, and reopening some very, very, very soon. Okay, I want to reopen some more. So look, this put is at $55. The current stock price is like 70 something, right? 73, 75. It's already at a discount. It's already dropped so much. So the likelihood of it dropping to this 55 level, and there's a reason why my strike prices are set. My strike prices are set at levels, right, where you get below levels where you get institutions buying in. Because of that, it makes it very, 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 very unlikely that I go ahead and get assigned. I can't tell you the last time I got assigned because I'm putting it at levels where the institutions or the algorithms will all kick in and form a layer of support. Look, this is at $55, the strike price, current stock price is 73. Even if it was to drop to 55, you're getting an already discounted stock, an even greater discount. And even if you were to go ahead and get assigned, you'd own the 100 shares of the stock. Guess what you would do? You go ahead and sell covered calls, aggressive covered calls, and that's a win-win strategy. Okay, cool. So this one's at 46%. So it will creep up as every day goes by. The percentages get higher, right? Because the option's decaying, because it's decaying, you're accumulating value. If you don't know what selling puts are, I've done a video on it, or just look it up on Google. You should definitely know. Qualcomm, another one, July 22nd, 115. This one's almost ready to be closed out. Okay, this has got an expiration date next week. So chance of it hitting 115 are pretty slim. All right. However, what I will say is on earnings, I do expect the stock to drop. I do expect maybe a bit of a toned down commentary relating to their guidance. But guess what? It's just another opportunity to go ahead and rerun the strategy. Okay, after that. On semiconductor, you guys will see a theme now. This is like semiconductor stock. There's a lot going on here. Why? Because a lot of these semiconductor stocks are on sale, right? They're on sale. Valuation levels look good. On is one that's not really spoken about, but it is a beast. And they focus on the infotainment systems and the technology within the cars. Big theme over the next decade. The sophistication within vehicles is going to increase, okay? And they are positioned very, very well. They're doing very well. Valuation is on the cheap. Not too far off valuation levels of Qualcomm, but they're growing faster. Okay, they're growing faster. So it's an undervalued company. So again, one I aggressively sell puts on. Now I want to be growing a position. I want a position in on. I want a stock position in on. Okay, AMD again, you guys will see the same names start coming up, right? Because these are some of the most quality names. There's another thing. And that is implied volatility. These stocks that have massive volatility in them, so stuff like AMD, things like Tesla, they are golden when it comes to selling puts. That's why I like to use them, because not only are they solid stocks for the long term, they've got great growth potential. Not only are they on the undervalued side of things, but they've also got high volatility as well. So that means you're able to get paid more for selling puts on them. So this one's at 60. This one's closing out in like 3 weeks time. So you guys can see I've got different strike prices and different expiration dates for these names. Next one's a little bit of a rogue one, right? And that's Square. This one's actually closing out this week, and this is a 55 put. Now this is the first one that's different to the others, right? The others are all like, you know, they're all apples, and this one's like an orange. So the reason, and this is a fintech name, the reason why I've sold a put on Square was really because at that point in time I had some collateral to use, and Square looked like an opportunity. Okay, it looked like a pretty decent opportunity. Without going into too much detail, this thing's at 83%, so very close to being cashed out, and the expiration is this Friday. Quick note on expiration: when I sell puts, I normally go 35 days, like 45 days. That's the sweet spot, because then it allows me to rerun and recycle the strategy. Okay, cool. So On again, closing out in 2 weeks time, $45 put, and then AMD again. So I told you guys, look, running the strategy on these quality names is absolutely golden. Now it brings me to another topic. These guys who say I'm only cash, I'm not doing anything in the market, wrong move. Look, by just keeping your cash in the bank, that is crazy. Reason is, with this selling strategy, I'm making like 2% of my money pretty much every 2.5 to 3 weeks time. So just keeping your money in the bank and just letting it erode, doing nothing, is actually stupid, right? So joke on the people who say, oh, I'm all cash, not doing anything in the market, or I'm just waiting for this and waiting for that. You're missing out on a massive opportunity, right? Selling puts, you have a market beating strategy at your fingertips. Look, let's move on. Going into the stocks that I own now. Now, Qualcomm, I told you guys, I've got a couple of different portfolios. I'm a little bit light on Qualcomm in this particular portfolio, but talking about Qualcomm, this is an undervalued stock, like I mentioned before, a quality name, and they are going to be taking market share in different spaces within the semiconductor industry. So what do I mean by that? We know that they got focus on smartphones, but they're making moves in the auto space, and the auto space is a massive theme over the decade. So they will be getting market share there. Not many people are speaking about this. Apple is one that I own very light in this, as well as Tesla. I'm not buying these two names where they're at currently right now. I want to see much bigger drops if I was to get into them. I don't believe the price point is that attractive for these two names right now. Google is the biggest position within this current portfolio. Google is splitting their stock this week. Now, for most people, that's a non-event. For those who are wise, this is a very interesting time for Google. Reason being, they split their stock. It means now you can run selling put strategies, whereas before, because they were $2,000 stock, they priced out everybody, apart from institutions. But now they're doing that 20-for-1. You can now sell puts on them and make money from the stock, even if they just trade sideways and do nothing. And that's probably the likelihood of Google, that they just trade sideways and don't do too much. Well, if you go ahead and sell puts and they trade sideways and don't do too much, you can make money. So this is a pretty big event that I'm looking forward to. But for most, it's a non-event. But listen up, Google 5 to 8% below the current price where it's at right now becomes attractive. And that is where I was last buying the stock. Again, just like Qualcomm, they could drop on earnings. Why? It could be uninspiring. There's not too much to be, super excited about. So, and YouTube revenue could be down. Okay, YouTube revenue could look quite weak. So they could come down in price. That's my expectation. All right, KKR, again, different to all the other names. This is an asset manager, own 100 shares in this. This is one that I like to run cover call strategies on. I'm not running anything right now with regards to cover calls, but I will be soon on this. Well, yeah, soonish on this. But KKR is a solid company because during down markets, this is when they start making moves that the market doesn't see. So they're able to go ahead, buy assets on the cheap. But then when you get that inflection, that flip in the market, that's when they start selling the assets. And everyone's like, oh man, KKR's like making money, they're killing it. That's because on the down market, they're buying assets, and that's what they're doing right now. Then you got Microsoft. I like Microsoft. I do like Microsoft. I haven't bought the stock in a while. If I do see a new year-to-date low, I definitely will add. Just like Google, they got that cloud business, and the cloud business should, over the course of the decade, should be, or will be, I should say, will be a value generator for them. Then you've got Nvidia. Okay, my Nvidia position in this is the most horrible. I was buying this too early. However, still got conviction in the stock. I do like other semiconductor names over this one, like an AMD, for example. I definitely choose AMD over NVIDIA. I'm happy to own this. And this is another one where I've run cover call strategies on, selling put strategies on, and I will do in the short term, I will do as well. So that's the account, guys. That's the account. That's the strategy. Those are the moves. And we're going to do weekly updates on this, right? So I hope you guys found that useful. Get yourself on Interactive Brokers, link in this video description. Catch you guys on the next one.